This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 198 is brought to us by Bybit. It's pretty obvious we're going to see some movement in these markets and probably a lot of it. Would you like to take advantage of this? Would you like to receive very obvious signals in the crypto market and profit wildly off of it? And would you like to do this on the strongest exchange in the world that gives you so many extra benefits just for being an active trader on it? Well, if this sounds good to you at all, and you're outside of the United States, here's what you do. You go down to the show notes, click on the Bybit blog, see if it's for you. If it is, my affiliate link is at the very bottom of that blog. Please click on it. It does support the podcast, and get yourself signed up, deposited, and trading. If you at least kind of know what you're doing, this should be a very large benefit for you long term. This is the volatility we've been waiting for. Take advantage at every turn and do it on Bybit, because with Bybit membership has its rewards. It is the 10-Minute Contrarian Podcast, and boy, are emotions high right now. And what do we always say about emotions here on the podcast and on my YouTube channel? They have no place in trading or investing. There is a clear difference between those who are good at this and those who are not good at this. And that one thing is being able to take emotions out of the equation. And there are several ways we do this. We will talk about those ways here on episode 198. But for historical reference, we're in the early days of the global Trump tariffs. He has already, experimented with this with Canada, Mexico, and China, and is now rolling them out on a more global scale. And there is a lot of concern as to what this will do for the global economy. And the market has reacted. Trump spoke right around the market close on Wednesday, and then on Thursday and Friday, we saw very, very large drops across the board, or almost across the board. Now, these were not like the COVID drops where it actually hit the limit down 10%, but it was like a 4% and a 5% drop in the S&P, and even larger on the NASDAQ, I think. And this had ripple effects through everything. This is probably the closest thing I've seen to actual panic selling since 2020. And the panic across mainstream media and social media both is very, very high. Which is very interesting to me just from a psychological standpoint, because nobody is really an expert on tariffs, and nobody has any idea what this administration in the United States is really trying to do, except for the administration itself. Yet everybody wants to draw a conclusion as to what these things are going to do, either on the positive or the negative side. Now, I personally don't play this game. You guys know that. All I do know is I've read probably a half dozen books on negotiation in my time. And I think reading books like this is very helpful during times like this, because you at least know the overall ethos of what this administration is trying to accomplish. Whether they do that or not, we don't know. We won't know for some time. We might not even know until after the term is over. But at least I know what a good negotiator who does have the big stack at the poker table is generally trying to accomplish here. And so I know a couple things might happen. One, the tariffs stick across the board, and we'll see how that affects things. Two, we end up with the same thing that happened in Canada and Mexico, to where we put the tariffs on. Then the very next day, the leaders of these countries come out and say, we're not going to take this. We're not going to let America bully us. And then the very next day, they capitulate and give the United States exactly what they were wanting. Because at the end of the day, they understand the situation they are in compared to the situation the United States is in. Now, different nations have different levels of dependency, and that's going to go a long way in determining how this all goes down. But we could also see a retraction in these tariffs fairly soon. That's always a possibility. And if we do, the market will likely recover for a while. But the one prediction I did make, and so far we are right on schedule, is that if they are going to do something bold and do the things they feel like needs to be done, and even though it's going to cause pain, you would absolutely do it now, in hopes that by the time midterm elections come around in 2026, towards the end of 2026, that we are on the recovery phase, and people are at least happy enough to where they don't vote in a handful of Democrats, which would no longer give him the leverage he has right now. And it also lines up perfectly with that Fed chart that we always look at on the show. If you're new or if you don't remember, Google St. Louis Fed rate chart. You will see what happens with rates right before a recession. They go up, they flatline, and they come down, and as they're coming down, that's when recessions happen. And this is exactly where we are chronologically. So these are two of the reasons why I think if I think there's going to be a quick recovery, or if I think we're actually going to fall into recession, I would lean towards B. I put out a blog this past week that outlined my entire thought process on this. You can go to the blog right now. It's the most recent one, nononsenseforex.com/blog, and I lay out my case. Now, from a human behavior standpoint, one, let me get this part out of the way. If you're going to sit here like every other idiot out there on social media and overly concern yourself about the causes of the market going down, then you are losing. Just know that. If you want to come down to the comment section on YouTube, this podcast does go to YouTube, by the way, and start arguing about tariffs and whether they will or will not work, you are losing. You are doing it wrong. You are letting emotion be your guide. And this podcast, honestly, is probably not for you. We win here. We win a lot. And being able to separate emotion from reality plays a big, big part. So again, do not worry about the cause. Concern yourself only with the effect, because that is what affects our portfolio, and that's the only thing that matters here. Now, the good news is, regardless of what happens, up or down, we can very easily be prepared, and we'll go over that in a moment. But I want to put this out there, another scenario I can probably see, and what I think would really exacerbate the recession, is the public outcry. Again, nobody really cares. You have a group of people that either love the administration or hate the administration, and you could set your watch to it. No matter what the issue is, you pretty much know what side they're going to be on. Those people are either miserable or it's part of their job, and they have to be this way. But we can pretty much ignore them. Now, for everybody else, most people really don't care about politics that much until it actually affects them, or they really think it might affect them. And I think you're just going to have too much negative sentiment going on between the people who already don't like Donald Trump, and they look for any opening they can to criticize him and try to turn sentiment against him. They had a lot of things they tried before that didn't work, and now they finally have something that they can really, really latch onto because, again, this affects a lot of people. And even if it doesn't affect a lot of people think it is going to affect them, so they are going to be very concerned. This is the opening a lot of the anti-Trump campaign needs to push their agenda forward. So you're going to have these guys going full on offensive, but you're also going to have other people chiming in a lot as well, especially if the market keeps going down. If entire countries feel like they're getting the short end of the stick here, they're going to band together and they're going to complain. You're going to have financial media complaining. Not just financial mass media, but on social media too, because they are not like us. They don't know how to profit in a down market. They sit there and they hold their positions through a down market and take absolute unnecessary losses for as long as it takes. And they're not going to be super happy about that. So they are going to sound off. Now you might say, well, VP, really nobody listens to mainstream financial media. Well, for the most part, they don't. But when things are going bad, a lot of them tune in more often than they normally would because they want to see what's going on. They want to try and make sense of it all. They want some type of answers. So you're going to have a lot more people paying attention, and almost everything they're going to see is going to be very negative. And then you have the gold community and the Bitcoin community who are also going to be negative because it pumps their bags. And the reason they're going to do this is because they are going to say that all of this is going to lead to printing, and more inflation, and therefore you need gold and Bitcoin. And I think all of these entities are going to be unified in their dislike for the market going down. Remember, especially in the United States, we are so spoiled in terms of quality of life, even still, and we should have had a pretty rough recession for some time now, and I don't count 2020, but the last time we had it really was 2008, and we just kept kicking the can down the road, which you are not supposed to do, by the way. You need recessions. Recessions are healthy. Recessions get all of the bad money and the malinvestment out of the market so you can reset it and eventually go higher later. But nobody wanted to do that because they wanted votes. So what that means is if we do have a recession, it's probably going to be pretty bad because the longer you postpone it, the worse it's going to be when it finally comes. And remember what I said a couple episodes ago. The market dropping 20% and then going right back up does not correct anything. That's just number go down, number go up. In order to have a real correction and to actually correct things, you need pain, and that pain has to last a while. So is this the big recession we've been prepping for this entire time? I can't say, but I will lean at least towards yes for the reasons I just explained. You finally have an administration in the United States, to whether you agree with them or not, is at least bold enough to do the things they feel like they need to do, regardless of if people like it or not. I do respect that. But again, I know emotions are high across the board, and a lot of you just can't help yourselves, and you don't want to win. You would rather complain. And if you want to complain, that is your own free will. Just please don't do it here, because that is not what we are about. We are here to make money and to hopefully become rich enough to where world events and external factors do not affect us. For what it's worth, if you missed last week's episode talking about Latin America, I showed you a way to where you can become rich tomorrow. Where I live, I'm rich, and things that would normally negatively affect the populace do not affect me and will not affect me. It's pretty awesome. And I want this for you too. And I want us to get there however we get there, whether it's the short way, the long way, some combination of both. I mean, contrarians, anything so you don't end up like these people running around with their hair on fire on social media. Losers. You can't sit there and worry things away. You cannot complain things away. You have to take action, and we are ready to take action. Now, before I go too far, there are some bull cases out there. Some I think, are more intelligent than others. Let's talk about those real quick. But there's so many people out there calling for dip buying. There's some dividend channels I like, CEF channels I like, and the general consensus there with the people who partake in these vehicles is actually very positive. They love the idea of getting in at a lower price. The CEF brigade loves getting in at a discount to NAV. Because with a lot of CEFs, you typically don't see a discount to NAV. It's only a premium. So they are jumping at the chance to, quote, buy this dip. Now, the problem with this, I think, is there's not a whole lot of other reasoning behind that. I think people over time have just gotten programmed to always buy the dip. And honestly, that's fine. I mean, that has worked pretty well for you most of the time. But as history has always told us, it's a good move until it isn't. And then when it isn't, you get murdered and you end up erasing all the gains you made for the last 4 or 5 years. Now, on the slightly more intelligent side, or I guess the side that I would give more credence to, I've seen some really good bull cases for Bitcoin based on some particular charts. Now, not really the price charts that we deal with as traders and investors, but without giving away all of my sources, just trust me, there's things there that look quite bullish for Bitcoin. We'll talk about Bitcoin a little bit later in the show, but those charts do exist. And you also have, for what it's worth, Tom Lee of CNBC has become famous for, really ever since 2020, being extremely bullish no matter what is happening in the market. And he will come on and everybody will lose their shit over him and he'll make a prediction and it normally comes true. To his credit, he's been great. And he was on the other day, and he is still quite bullish. So he doesn't think a recession's happening. Now, it's one of those things, too. To my knowledge, he's never been bearish. So, maybe he's kind of the anti-Peter Schiff, the anti-Robert Kiyosaki when it comes to his economic predictions overall. And if you're just on one side the whole time, and that just happens to be the side that's working, you're going to look a lot smarter than you probably are. Or maybe you're just smart. Maybe you're just good at this. And he is saying that he expects a recovery and expects a recovery pretty soon. So I didn't want to make this a, recession doomer episode, but I lean where I lean. And let's go ahead and get into the solutions part of this episode. Talk about what's going on, talk about what we're seeing, and what we can do about it. Now, I would be selling you short if I didn't go back to the episode that I always go back to on the show now. It's one of the most important episodes we've ever done on the show, and it was talking about the monthly chart. I think every single person here needs to have their monthly charts up at all times. We want to gauge sentiment, but sentiment is a bit erratic right now. So what do you do in this case? You zoom out. You step back. You let the entire month play out. And once it has completed, then you make a decision. Again, everybody's running around with their hair on fire trying to make moves in the moment. This is not the way. One, you should have already been prepared and positioned for this if you listen to this podcast. That's literally all we do here. But from this point forward, you need to zoom out, let things play out, and then adjust accordingly. Because I'll bet you guys have been losing your ass on a lot of positions because this is what happens during a panic sell. We've talked about this before. The only thing that really goes up in a panic sell is cash because everybody sells everything and liquidates, which means you go to cash. Now, to me, there are 4 stages, 4 levels, I should say, of handling a recession the right way. Step 1 is just to go into cash. Win by not losing. If the whole world is losing and you're not losing anything, you're winning. You're winning a lot, actually. But the next stage, and we've talked about this here on the show as well, is while you're sitting in cash, earning yield for the cash you're sitting in. That's another level. Because you're actually making money while the whole world is losing. Instead of just being completely neutral, you're actually making money. You're getting paid with very, very little risk. We like that here. The next stage is to put your money into vehicles which typically or almost always have done well during a market downturn. We'll get to those in a moment. We've already talked about those here on the show, but we'll also get to those here. And then the next level is actually earning yield on those instruments that go up during the recession. Contrarians, imagine that. The whole world's losing their ass. Not only are you making money, you're getting paid to make money. This is what I was talking about in the very early days of this show, the great wealth transfer. How do you end up on the right side of it? This is how. Now, an actual recession has to happen first. I understand that. But if it does, here is what I think we can expect going forward. Let's start with the United States dollar. Now, again, cash across the board is going to be a generally good move here. But as far as which currency, we've talked about this on the show before. You need to have those currency charts up and zoom out to the monthly. Because if you can, it is probably in your best interest to move into currencies which are going to be stronger than the one you're currently in. And if you're in dollars, which the majority of you probably do have some dollar exposure somewhere, it at least wouldn't hurt you to have that agility to move into something else should you need to. And if this administration gets their way, they have also said that they want a lower dollar. It's good for manufacturing, good for the economy. Now, I mentioned here before, too, currency expert Brent Johnson says during the building phase, which we're going to be in for a couple of years at least, you should expect a stronger dollar. We'll see how that goes. But, your charts are right there. Your charts are going to tell you where we're going. I still would personally expect it to go down. But as is the case with everything I'm going to talk about for the remainder of the show, kind of doesn't matter. Just look at your charts, see what they tell you, act accordingly. I don't think you guys understand the advantage we have here on the show over literally everybody else. Use that advantage. The time is now. The time is always, but God, especially during a recession if it happens. If you've been listening to me this entire time and you don't act during a recession, I do not understand what you are doing with your life. Anyway, let's move on to some other instruments. Bond ETFs. We had a whole episode on this. These should absolutely go higher. This, again, is you getting paid for your cash. The bonus with bond ETFs, I'm in one right now, and I'm super happy I'm in it. It's actually doing fairly well, is if there is a threat of lowering rates, which, lowering rates typically happen when the market's going down, so you can make, lending cheaper and eventually get the market going up again. On top of the fact that Trump is literally begging for them, we can reasonably assume that rates are probably going to drop before they rise in the United States. And that is a really, really big advantage, especially if you hold bond ETFs, because they're probably going to go up. Now, some go up a little, some go up a lot. You just have to decide how aggressive you want to be here, or if you want to have a combination of both. I do. But I'm certainly also playing this to the upside, and not financial advice. I recommend everybody at least look into this possibility, because the probabilities will be heavily on our side should we enter a legit recession. Gold. Gold did drop in these last 2 days because, again, it always does. Everybody's like, everybody flocks to gold. They do eventually, but during the panic phase, they don't. For some reason, people just sell every asset they have and go to cash. But gold, as it has been, you got to wonder, was it pretty good forward thinking that all of these countries who probably knew what was about to happen loaded up on gold? I would expect gold to just continue to go up long term, and any dips that are out there, I think, would be pretty wise to maybe add to your gold holdings here. Now, energy and energy stocks, same thing. We saw oil and a lot of energy stocks drop a lot, but that's just panic dumping. This is not smart, because if we have a real recession, energy stocks are almost always going to go up. Check your history. Just go as far back as 2022. I think that's a really good way to look at it, because it might not have been a full-on recession, but it's the closest data we have to almost an entire year where people were mostly selling. So almost everything you're going to pull up on a chart is going to go down in 2022, but energy doesn't. And now, because of the panic selling, we're going to get some pretty good prices on these stocks when they do decide to turn back upward. So again, if you want to move right to the front of the line and actually start making money while the world is losing money, energy stocks are a really good way to go. And by the way, you can move all the way to the top, because almost all of these energy stocks pay a pretty nice dividend on top of that. So you get paid a bonus for winning when everybody else is losing. You guys should all be putting energy stocks on your watch list right now. You're on your monthly chart. You're probably not going to be getting any signals, but you may soon, and you're going to want to be around for that. Now, industrial metals, anything that involves building. So, we saw copper absolutely dump. Copper was interesting because it moved up a lot before this, but stocks didn't. I think stockholders, they were around for the first two moves up, which we on the show here called absolute fugazi on. And they're like, I'm not going to get caught up in this again. And on this last move, turns out it was also fugazi. We didn't really call it here. I didn't say anything. I think I made a joke about it on Twitter, but that was it. But if copper is dumping, all of these copper stocks that either went nowhere during the run-up or might have gone even down a little bit have gotten even cheaper and will continue to get cheaper as we go forward. These are stocks you are going to really, really want once the recovery hits. So you may need to be a bit more patient here, but absolutely have these on your radar and on your watch list as well. I said this long ago. For the next 10 years, if I'm looking that far ahead, copper is my number one position. I have a little bit of exposure now just so I don't get left out, but I will be really loading up as time moves forward. And if you're going to give me super low prices because of a recession, bring it. I'm more excited on this than I am pretty much anything else I invest in. But all your building materials, copper, iron ore, are going to fall, and this is why you're seeing silver fall as well. Now, as far as silver goes, it's probably going to go up when gold does, Difference is we're getting a much bigger discount on it now because of the industrial aspect to it being such a negative. Remember, if you're wondering why these things are falling, it's because during a recession, nobody builds shit. The United States says they're going to, but we haven't seen it even start yet. We may need to wash things out first before we get going. But I think we have a nice little divergence going on right now with silver because it's getting caught up in this. And I do think that provides opportunities. Now, what about Bitcoin? You've probably been waiting for me to get to this or wondering if I was ever going to get to it. Of course I am. What was interesting is with the 2 sell-off days we had, on that very first day, Thursday, it fell. But on the second day, it went up. The only other thing I really saw go up was bond ETFs. Because remember, money has to go somewhere. So it went to cash, and it went to cash that pays you. But it also went to Bitcoin. How about that? If you remember, we've always wondered, contrarians, when is Bitcoin going to be an actual flight to safety? When is it going to decouple itself from the overall stock market? There will be a day, and we want to be around when that day comes. But we've had a couple of fake outs so far, but things are really looking promising here. If you remember back during the Silicon Valley banking crisis, people did flock to Bitcoin. There are people out there who really see this as a flight to safety. Now, that's great for, crypto-minded people because they were really in tune with what was going on with the banks. But will the normies get in? When the actual stock market crashes, will they go to Bitcoin? That's really the turn we're looking for. And if one day was any indication, looks like they're doing that. Again, one day isn't long enough, but hey, the fact that it even happened when everything else was tanking, contrarians, do not sleep on this. That was significant. And with Bitcoin, you may not get a bullish signal on your monthly charts because you would need to have a bearish one first. And it just may never get there. So again, not official financial advice. I'm not licensed to do that, but to me, buying more Bitcoin's never a bad idea. And if it's going to behave like this, just saying. Now, as far as the rest of the crypto market goes, I would anticipate most of it to go down with the rest of the market. Now, this is unfortunate, but as people who have been in the crypto game for as long as we have, we are no stranger to this. We're just like, whatever. Are you giving me a chance to add on more at a really cheap price? Great. Can't wait. Bring it. That is the mentality everybody here should have. We have a very long-term outlook on most of the crypto market because you have to. Unless you're trading daily, you really have no choice because these projects take a long time to implement. Now, there's some sectors out there like Web3 gaming that I was expecting or really hoping to really start hitting a stride in 2025. At this point, if the market's going to go down like this, I hope it doesn't. I want it to come around in the recovery and get people excited about it when things are going well and get that nice momentum across the board. That's what I'm looking for. And if we have to wait another year for that, it's like, shit, I've already waited 5. Again, you want to give me cheaper prices on things like Avalanche and IMX and stuff like that? I am fine with that. But those are the only things I'm going to cover in this episode. I'm sure there's going to be some other things you're like, well, what do you think about this? What do you think about that? Here's my answer. Pull up your monthly charts, buy when it tells you to buy. More often than not, we're going to have future episodes that really drill down into a lot of things I did not talk about here. And so I don't want to reveal my thoughts until that episode airs. But when it comes to the monthly chart, I do know that most of you are probably getting bearish signals if you did not already get bearish signals last month. And so the time to switch over to your bear market playbook is either coming or it's already here. But if you do not have a signal, a bearish signal yet, wait for the month to play out. I know it's a long time from now, but you have to get used to doing this. You have to train yourself to not make rash decisions like everybody else is making right now. Because we really don't know how the rest of this month is going to play out. Everybody's got their ideas. But at the end of the day, you don't know, I don't know, The self-proclaimed expert on social media doesn't know. The financial news anchor has no fucking idea. Let these people yell and scream and beat the shit out of each other while you, like a Roman emperor, sit back and just say, look at those people. Look at these peasants going crazy and fighting each other. Look how stupid they are. Like, seriously, this is my approach. This is what I do. I don't care what you think about it. You know, I sit on my make-believe throne, watch the peasants go nuts, and just wait for my charts to tell me when to move. It's really all it is, guys. Because when it's all said and done, I'm not crazy. They're crazy. We're just early.